Moving on with our project here, and it is time to take a look at the next currency pair. This is the New Zealand dollar, US dollar. Again, this binary option strategy, the high, low, middle strategy that we are analyzing here, it is based on the 4-hour chart, based on 3 indicators. Look at the previous recordings that are going to be available on the YouTube and see what the setup, the standard setup means. What we are trying to do here, and this is the 1st of October, trying to analyze the possible trades from the 1st of October this year until the current situation and the current levels. So basically we should start from this vertical line, and we are looking for price to give us signals, and this is a bearish signal, not that one but this one, as we need a red candle for the CCI. Bearish signal, buying calls based on this one, but as you can see the outcome is negative at the expiration date. The expiration date should be the close of the next candle, so basically you have an expiration date, a 4-hour expiration date. So moving forward, this one again would be a signal to the downside, again a loser. Then moving forward here, not a signal there. This one not a signal, not a signal there. This one no. This would be a signal to the downside, in the sense that, as you can see, the CCI is red, the KGFI is below 0, and price is in the lower part of the channel there. So normally this should be, sorry about that, so normally this should be a buy put signals, but it expired out of the money. Then this should be to the upside, but the KGFI anyways is positive, so this is a buy call signal. But again this is expiring out of the money. This one is a valid signal to the upside, but it's expiring out of the money. Moving forward, not a signal here, but a signal there, and again it expires out of the money. Moving on, this is a bullish signal, not that one but this one. This is a bullish signal, and basically, as you can see, it expires out of the money. A bullish signal again here with a valid KGFI. Price is looking to the upside, but it expires out of the money. So I don't know how many trades we had on the New Zealand dollar, US dollar so far, but almost all of them expired out of the money. Quite an interesting situation, because I'm thinking of the recommendation to put on this strategy, and you can imagine the outcome. However, you may be surprised, so stay tuned to see our recommendation. This is not a buying put or a short signal, because price is in the upper half of the channel. This is a sell signal, and this is a buy. This is a winner. Sorry. So a buy put signals. This is a winner. Moving forward, this should be a valid buy signal, but at the expiration date, this one unbelievably goes again and expires out of the money. This one finally goes into the money. I think this is the first winner, or yeah, the first winner in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in 11 trades. Very good strategy. So expired, we said, in the money. KGFI confirming this one, so this should be a buy call that expires in the money. Buy calls in the money. Let's see, not, because the moving average is not confirming. This one here, the moving average is okay. The closing price is 83.86. This is 83.85. So according to our standards, this is going out of the money. Then this one goes into the money, valid. Then this one goes again into the money, valid. Then moving. This one here is a valid signal, but it goes out of the money. So basically it's a loser in terms of, or not being profitable in terms of binary options. Not interested. This one is a clear fake signal, but the strategy decides to take this one to the upside. So out of the money. Here we have a bearish signal, but it expires, out of the money as well. So if you go and buy puts here with the expiration date at the very next candle, you are going to suffer. This is valid signal to the upside, but expiration date is finding the option out of the money. This is a valid signal to the downside, expired, out of the money. This is valid signal to the downside, but the moving average is not confirming. So moving on. This one not confirmed by the moving average. This one is confirmed by the moving average. So basically, we should buy puts there with a successful trade for the 4-hour chart. Then this one here is not confirmed by the moving average. This one there is confirmed, so basically we should buy here, amazingly, we should buy here puts with the expiration date for the close of the candle, and it is a loser. Buy puts again here, another loser. Moving. This should be a buy call, and this is a winner. And that's pretty much it. This should be a buy puts, and this is a winner. So let's see the outcome. I think you already know the result if you watch this recording. So we are talking about the period from the 1st of October, so 1/10 until the 8th of November 2013 on the New Zealand dollar US dollar pair, or the Kiwi, and we traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 23, 24, 25 binary options. And I will just count the winners because there are clearly few winners. So 25 binary options, 25 trades, let's say, out of which 1, 2, 3, 4, 5, 6 expired into the money. So 6 trades expired into the money. Unbelievable. 6 trades, okay? So 6 winners according to the strategy, and 19 losers. Now you know that based on the outcome of this analysis of this project, of this evaluation for the binary option systems, we are going to issue a recommendation. I'm starting to think to issue a recommendation to do exactly the opposite like the strategy says, because it is clear from now we studied 1, 2, 3, 4, 5, 6 currency pairs, and in the last 1.5 months almost, the losing trades were clearly, let's say more losing trades than winning ones. So I'm really starting to think to recommend to do exactly the opposite like the strategy says, and you'll be profitable. Let's move on to the next currency pair.